Thank you very much. Here to tell you about a different lithium story today. My name is Tim Johnston. I'm the CEO and President of Desert Lion Energy. Forward-looking statement. Happy to come by our booth and get a copy of that if you want to read that. But in general, this is us. We're a hard rock lithium asset, or we have a hard rock lithium asset rather, in Namibia. Namibia is in the southern part of Africa. For those of you who will think back to your African history, Namibia used to be part of South Africa up until 1990. We're benefited by that history in a number of different ways. The most prominent way when it comes to developing this asset, however, is the prominence of existing infrastructure. Where we are in Namibia is halfway between the capital of Windhoek and the major port of Walvis Bay. So we're 220 kilometers away from the port. Our property is 20 kilometers away from the main Trans-Namibian highway and rail line that runs through the town of Karibib. Our property is serviced by existing water and power infrastructure. Why this is all important is because our property itself is actually a past producing lithium mine. Our property, we started off with 300 square kilometers. We've now grown that land package to over 1,000 square kilometers in what is one of the largest lithium-bearing pegmatite belts in the world. But those past producing lithium mines, they were operated from the 1960s through to the early 1990s for the ceramics, glass, and tantalum industries. This is pre-battery sector, and they left us behind a gift. And that gift has allowed us to do a lot in a very short amount of time. We acquired the property in January of 2017. We started production. That's right, we're actually in production producing 600 tons of concentrate per day as I stand here before you. We did that through going through and building on what had been done historically. Because there was a past producing mine for the ceramics and glass industry, what they left behind was a lot of lithium-bearing mineralogy. We drilled this out and we identified that we had over 750,000 tons of run-of-mine material grading about 1% lithium oxide. Based on this knowledge, we then set forth with a three-phase execution plan. We looked at how do we develop the asset from a long-term perspective, from a geology and engineering perspective, but then also how do we de-risk the project from a cash flow and marketing perspective. We then set forth to develop these historic run-of-mine stockpiles in parallel to developing out the necessary resource and engineering work for phases 2 and 3. Phase 1 being production from these run-of-mine stockpiles, phase 2 being more traditional open-cut mining, large-scale concentrate production, and then ultimately phase 3 is going to be lithium carbonate production down in Walvis Bay. Once again, we're going through this in a sequential process. In order to complete the phase 1 activities, what we did is we went through the permitting process. We completed our environmental impact assessment. It's one of the things we're very grateful in Namibia is we then had that approved within 45 days. We've now subsequently had our environmental impact assessment for both phase 1 and phase 2 approved. We then received our water abstraction license. We received our permit to process the phase 1 stockpiles, and we're currently in the final stages of getting our phase 2 mining license. Very straightforward from a permitting perspective. That's half the story. The other half of the story is, okay, well then how do you actually sell the material? Where's the market for it? We started a process in China in March last year. Basically, we went and visited all the different converters that were available to process our mineralogy through to lithium chemicals. We signed LOIs with all of them, had a commercial process where we completed due diligence on both sides, ultimately shortlisted 2, before signing an offtake agreement with a group called Jinhui in November of last year. Jinhui gave us $4.5 million US in prepayment, that's non-dilutive financing, secured against future production. We've subsequently delivered our first shipment to them, which was 30,000 tons of concentrate that left the port of Walvis Bay on the 2nd of May this month. That allows us to basically continue our operation. There's no more requirements against that prepayment. As we produce, we will pay it back at a rate of $40 per ton of production. Our offtake partner purchases everything from us FOB Walvis Bay, they're contractually obligated to take everything that we produce from the run-of-mine stockpiles. That is that we have sold all our production that we can produce from the phase one part of the project ahead of having completed that. For phase two, they have a right of first refusal. That is currently sitting at 12 months. They have an option to extend that to 5 years. They're currently in the midst of reviewing that option. That was a 60-day option that started from the date in which we started loading the first vessel. That was the 24th of last month. We have about 45 days left. That $13 million Canadian investment is priced at $1.50 a share. And why would they do that? Our share price is $1.10 as of close of yesterday. Well, the reason is because last year they spent 1.2 billion RMB building new lithium carbonate conversion plants in China, and were short approximately 8,000 tons of lithium carbonate units when it came to the final production, because they don't own their own natural resources. They rely on the market for the supply of concentrate, and therefore securing offtake and securing raw material supply is their key focus going forward. We are in production. We did list on the Toronto Stock Exchange earlier this year, approximately 3 months ago. Our share price today is currently sitting, allowing us to have a market capitalization of about $50 million Canadian. We have $5 million Canadian on the balance sheet. We're generating $300,000 US, or about $500,000 Canadian per month in free cash from our operation. By the time we complete processing the stockpiles over the next 12 to 18 months, we would have generated between $15 and $20 million US, $20 to $25 million Canadian. So you compare that to our current valuation, there's a lot of proximity for growth there. But in the meantime, we haven't forgotten about phases 2 and 3. We've completed 20,000 meters of drilling. We have a fully operational geological team with 7 full-time geologists working on site. We have a full analytical lab. Our maiden resource estimate and PEA will come out at the end of this quarter. That will be supported from those 20,000 meters of drilling that I just referred to. We will continue to step that out this year, as the first part of the resource focuses purely on the historic 2 mines, or the 2 major mines, Rubicon and Helicon, on the property. That is 2 of over 70 pegmatites we've identified on our initial land package. That was a 300 square kilometer land package. We now have over 1,000 square kilometers, and we see significant upside to continue to grow out that resource in the coming years to come, So our offtake partner, a nice picture from down at the port. We'll show you another picture shortly of what 30,000 tons of concentrate looks like. But effectively, they've been a fantastic partner. I cannot speak highly enough of them. You know, there's the question of when you sign the agreement, will they actually put up the cash? They put up that $4.5 million US within 2 weeks of signing the definitive agreement. They've been very prompt. We get a letter of credit put up 2 weeks before the loading of the vessel. It's released to us at 110% of the value of the shipment within 48 hours or 2 days of loading the vessel. They're a highly creditworthy partner. They need the lithium units. They've been very supportive in helping us develop what we're building at the moment, which is our phase 1 flotation plant, and helping us through that process, including doing test work for us. They're sending a team to help us complete the construction and commissioning of that as we move towards that at the end of Q3. Some pretty pictures to finish it off. When you come to our mine site, it is truly a mine site. We have over 100 people there working on the property today. There's articulated dump trucks, excavators, all the things you want to see on a fully operating mine site. We have a full analytical lab with ICP that processes both production and geological samples. For the geological samples, they're going through the process of certification at the moment. So it's a true operation with significant upside potential from an exploration perspective. Some photos from the loading of the first shipment. That bottom right-hand corner is what that little pile before us grew into. That's 30,000 tons of concentrate. This is not a small operation, but rather a meaningful operation. And we'll generate about 5% of the world's production of lithium units in the next 12 months. This is their facility in China. This is an important part of what we did is on our side of the due diligence. We wanted to make sure that they could actually process our material through to representative products. I'm going to come back to you next year. I'm going to be able to show you that we've had lithium carbonate produced for the battery sector from our mineral, and then be able to show you batteries that are being produced from that lithium carbonate. So well ahead of going into phase 2, we would have fully validated our marketing regime. We're at booth F7. Feel free to drop by and say hello. And if you want any more follow-up, you can also contact us on the contact details here. Thank you.